If you're new to Forex trading, one of the first things you'll hear about is technical analysis. But what exactly is it, and how can you use it to make smart trading decisions? That's exactly what we're diving into today on FX Limit. Technical analysis is essentially the art of studying price charts to predict future price movements. It's all about patterns, indicators, and price action. But don't worry, you don't need to be a math genius or a chart wizard to get started. The goal here is to learn a few solid methods and actually understand how to use them, not just memorize fancy names. Let's start with one of the most popular tools, support and resistance. These are key price levels where the market tends to reverse or stall. Think of them like invisible barriers. Support keeps price from falling lower, and resistance keeps it from going higher. Spotting these zones gives you potential entry or exit points. For example, if price is bouncing off support multiple times, that could be a good opportunity to buy. Breakouts above resistance? That might signal a strong uptrend forming. Next up is moving averages. A moving average smooths out price data over time, making it easier to spot trends. The 50-day and 200-day moving averages are classics. When the shorter average crosses above the longer one, that's called a golden cross, a potential buy signal. The opposite, called a death cross, suggests a downtrend. Simple, but super effective when used right. Another favorite of beginner traders is the Relative Strength Index, or RSI. This indicator tells you whether a pair is overbought or oversold. If RSI is above 70, it might be overbought and due for a pullback. If it's below 30, it could be oversold and ready to bounce back. Pairing RSI with support and resistance gives you a powerful combo to find better trades. Candlestick patterns are another great technique. You don't need to memorize every single one. Just a few key patterns like the engulfing pattern, hammer, and shooting star can make a big difference. These patterns give you clues about market sentiment and possible reversals, especially when they appear at strong support or resistance levels. Now here's the real talk. Learning all of this is great, but applying it consistently is the real challenge. This is where tools like the Apex Trend Indicator can be a game changer. As a beginner, spotting trends and identifying high-probability setups can feel overwhelming. The Apex Trend Indicator helps simplify that process. It automatically shows you whether a pair is in an uptrend or downtrend and gives you buy or sell signals that never repaint. That means what you see is what you get, no misleading signals. Plus, it supports multiple time frames and currency pairs, which makes it easier for you to zoom out and see the big picture or drill down to find precise entries. The dashboard even shows success rates, so you're not just guessing, you're trading based on data. Whether you're using moving averages or RSI, having confirmation from a trusted trend scanner can boost your confidence and keep you on the right track. And it's not just for advanced traders. The whole idea behind it is simplicity. No complicated panels, no confusing setup. Just plug it into MetaTrader 4, and you're good to go. You'll see clear arrows, take profit levels, and stop losses right on your chart. It's like having a coach whispering trade ideas as you go. The bottom line is this. Technical analysis is your best friend in Forex, especially as a beginner. Start with the basics, support and resistance, moving averages, RSI, and candlestick patterns. But don't try to go at it alone. Tools like the Apex Trend Indicator are designed to guide you through the noise and help you focus on what really matters, making good trades. If you want to learn more or try it out yourself, check out fxlimit.com. We've got everything you need to start strong and trade smarter. This is FX Limit. Thanks for watching, and see you in the next one.